IPO, Initial Public Offering. What is an IPO? Initial Public Offering. When a company decides to give its shares for the first time to the public, it's known as IPO. So for instance, the company does this to either increase its revenue or the initial investors would want to sell off their shares for money. So for example, this is Dave and he owns a truck business and now he wants to expand his business to various other cities. So for which he will issue shares to the public, for which he can buy more trucks, merchandise and even employees for expansion. For this, Dave will go for an institute where he will go based on the amount of capital he will require. The company will then analyze his business plan and evaluate his business and accordingly will provide the amount of shares that he can issue to the public and at what price and rate. For instance, we can consider $10 crores for 10%, after which it will be issued to the public on the base of 10 lakh shares at $10 each, and then the IPO will be released to the public and subscriptions will happen. In the 90s, it was seen that the IT companies used these strategies to raise funds and it was a grand success. Leverages. So a leverage actually acts as a cushion when a person doesn't have sufficient amount of fund. This leverage will act like a cushion or a spring and then help them to increase or get something that is beyond their reach. There are two types of leverages. One is financial leverage and the other one is non-financial leverage. It is form of an operational facility provided by a broker to an investor that embeds him or her to take position larger than the required amount of capital. Using leverage in trading entails using funds that are not actually available, and this gives a spring or upper hand. Evening star. Evening star is one which has three candles. The first one green, the middle one small red, and the other one red. So this actually changes the trend of the market. Supposingly, if the market is moving upwards, then this candlestick is a clear indication that the market next will go downwards. So the identification is these three candles. Three inside up patterns. So in this trend, if you actually see which is tending to move upwards, there are these three candlesticks which determine the trend of the market. Supposingly, if the trend is moving upwards and then if these three candlesticks are noted, then it is a clear indication that the pattern is going to change or it is going to move against what the previous trend was. Supposingly, for instance, if it was a downward trend and you find these three kind of candles, so it is a clear indication that the next candle, which is green, followed by another green candle which is actually higher than the previous one, then the trend for sure will move upwards. Suppose in an upward trend, there you find one red candle and then post that you find a green candle and then the next candle post that is another red candle wherein it is for sure that the trend is going downwards. But the better identification is when you draw a straight line from the open and then drawing it straight to the third candle where it has to pass more than 3/4 of the volume of that candle. Then it is a clear indication that the trend is now going to change and the trend will move opposite direction to what the market initially was. This candlestick is also widely used and is also one of the most accurate, reliable ones. The trend is again downwards. If you find these three candlesticks, Then drawing the line, again the line should pass to the 3/4 or from the above the quarter, which gives a clear indication that this trend is going to change and it is going to move upwards as it has broken its resistance line. So therefore a new support is formed. This can be observed in various charts of various stocks or indices or even forex. In this you can identify the entry point. Suppose if you are going for a pull option or a short, then this will be your entry point, and then you can also predict for the exit point as well. As the green candlestick's line when drawn forward cuts the red candlestick by 3/4, which is a clear indication that the person who is going to go for a pull or a short should actually enter here, which thereby will give maximum results. It is the same when applied for the trend which was moving downwards, and then you find these three candlesticks. So then when you draw from the upper shadow, the line has to pass through the green candlestick more than 3/4, wherein this will be the entry point for the person who is going long or for a call, as it is a clear indication that the trend is going to move upwards. And this is one of the most widely used technical strategies that people use for intraday trades. Spinning top pattern. Hammer and hanging man pattern. There is a difference between which you should understand between spinning top and doji. Hammer and hanging man patterns will also help us identify that there is going to be a change in the trend. Spinning top and doji. In a spinning top, you can find that there is shadow up and down and there is a small volume. And in a hanging man and in a hammer pattern, it is seen that there is no wick, only one side there's a wick. So therefore a spinning top does not apply for this kind of pattern. The open market price, and then it's a bear entry and the lowest price. When the price moves upwards, it is a bullish, and then the market closing price happens, leaving a small volume where there were maximum buyers and sellers. So this is an uncertainty in the market. Therefore, we do not consider this as an indicator. Spinning top at times can be easily be confused with a hammer or a hanging man pattern, but it is to be known that for a hammer there is only one side wick, or even for a hanging man there is only one side wick and the wick isn't seen two sides. Similarly, even in the case of doji, where the closing and the opening prices are the same level, this again is a false indication because there will be a lot of uncertainty in the market. So when you talk about a doji, the opening price, suppose if it is at 100, then the closing price also is at 100, and high at 105 and low at 95, meaning to say that there wasn't any momentum between the bears or the bulls. It will only give you a short-term momentum for the next trend movement, but it is not a clear indication, and this also is again to indicate that there is a lot of uncertainty that is coming up because the buyers and the sellers are still not able to decide and the price remains at the same point. Now, if you see here the opening of the market, the bears enters and then again the bull also enters, but they remain at the same point. The closing price and the opening price at that particular candlestick remains same because there was not much of a momentum. See, this is a clear indication of uncertainty in the market. The buyers and the sellers, both of them are at the same level. So in doji we have two types, the gravestone doji and the dragonfly doji. The grey stone doji, the opening and the low price is at the same level, and in a dragonfly, the opening price and the closing price is at the same level. Where the market, the bulls enter, and then the momentum rises, and then after reaching the high price, the fall happens, where the opening and closing remain same. Here in this, the bears enter, the opening of the market, and again the closing of the market is at the high. In case of hammer pattern, it's a clear indication, but a dragonfly doji, there is still an indication that there is an uncertainty ahead. And a spinning top and a doji is not an indication, but it is a clear indication that there is a lot of uncertainty between the buyers and the sellers, and they're not able to decide which to go ahead. So therefore, a hanging man and a hammer pattern is a clear indication, and it is always essential to follow the right trend and pattern so that we do not end up losing a lot of money. And therefore, when you see a spinning top or a doji, it is for a short period, but it is also to indicate there is high uncertainty in the market. So one who is an investor who doesn't want to lose a lot of money or wants to take low risk should try to stay away and wait for the term to come. But there is another clear indicator, that is the engulfing pattern, where when one candlestick engulfs the other candlestick, this is a clear indication that there is a change in